take the time needed to plan a model to develop some top tier services that your sub offices can benefit from. As you build your brand and multiply your sub offices, you will start to generate a strong revenue stream simply from the service bureau fee itself. Welcome to the TaxVerse podcast experience with CrossLink Professional Tax Solutions. My name is Zach Kreitz, the host of the podcast where we help you grow your community, generate more revenue, and expand your knowledge. If you are new to this podcast, please consider subscribing to the podcast wherever you listen to content. Today's episode hits home for me since I worked for a company with this business model for many years, and I learned a ton from those years. I truly hope my perspective provides some value for you in today's episode, where I'm going to be discussing how to boost your revenue by becoming a service bureau. Let's get into the episode. Tax service bureaus have been around for a long time. These business models are not anything new to the industry, but I want to try and provide a clear explanation of this model for those of you that may just have gotten into the industry, or for those of you that have heard the term but may not fully understand the model. Traditionally, a tax service bureau is basically a service company that resells professional tax preparation software that has been rebranded with the service bureau's logo and branding. Generally, the services that these tax service bureaus provide on top of the tax preparation software are additional resources like training and customer support. These services are a very important part to the structure of the company. This value will be the main revenue contributor, as we will go over shortly. Think of a service bureau as their own tax preparation software company without the engineering and development team needed to support their own tax software. Many service bureaus still include your traditional company structures with sales, marketing, and operations, but simply don't have the resources to build their own tax software. So instead, they choose to offer their solutions as a reseller of actual professional tax preparation software. Many companies have been successful in doing this, and today I'm going to show you how these companies generate more revenue streams by utilizing this business model. Before I get too much in the weeds, I want to start simple. Let's take a moment and first explain a simple difference in the model from your normal tax professional. Tax professionals generally prepare or review tax returns and discuss them with clients. As a service bureau, your clients are now tax professionals. These tax professionals will take on the responsibility of preparing and discussing tax situations with their clients under your service bureau. These offices are commonly referred to as sub-offices. Now that we have the established hierarchy of the model, let's jump into how this model can boost your revenue potential. Service bureaus generally generate their revenue off software sales and, more importantly, each bank product that is funded within their structure. A service bureau fee is applied to each bank product that is applied. What is a service bureau fee? A service bureau fee is a value that the service bureau charges their sub-offices on all bank product returns. Let's say, for instance, you have an office that does 100 bank product returns. On those 100 returns, you charge a service bureau fee of $20. That means the tax customer will typically pay the preparation fee and the $20 service bureau fee when filing their tax return. The sub-offices keep the preparation fee, and you collect the service bureau fee. In this example alone, your service bureau will collect $2,000 of revenue from the service bureau fee on those 100 bank product returns without needing to prepare any tax returns, just simply providing a valuable service to your sub-offices. Now, this is the key: providing a valuable service to your sub-offices. When creating your service bureau and developing your products and services, keep in mind that your sub-offices are not going to feel too good about a service bureau fee of $200 and you don't provide any other value but software. So take the time needed to plan a model to develop some top tier services that your sub-offices can benefit from. As you build your brand and multiply your sub-offices, you will start to generate a strong revenue stream simply from the service bureau fee itself. But you can also incorporate add-on fees to options like the tech fee that can also produce multiple revenue streams for your business. So let's review the revenue structure of a service bureau. Software sales to all sub-offices. The service bureau fee is applied to all bank products that your sub-offices file, and any add-on fees to choose to apply to your sub-offices that also would be collected at the return level. So let's say your service bureau structure is this. You have 10 sub-offices under your organization. You charge them $500 for software licenses, which is $5,000 in revenue for your company. And let's say out of the 10 sub-offices, they all together prepare 1,000 bank product returns, where you issue a standard $20 service bureau fee for each return. That's $20,000 in additional revenue for your business that I haven't even talked about any additional add-ons. This is a good example of how you can boost your revenue on top of software sales when applying the service bureau fee only. And on top of that, your sub-offices can apply their own add-on to make additional revenue for their office. This is a great opportunity for your sub-offices to boost their revenue by utilizing your service bureau fee. One of the add-ons that I personally like is the tech fee add-on. Why? Because not only can this tech fee be collected on bank product returns, but it can also be collected on e-file only returns. So if your sub-offices file a lot of non-bank product returns, then you can collect additional revenue by utilizing this fee in your business model. Now, once your business is producing enough volume from your sub-offices, you can then start to generate bank rebates based on volume. This would make another revenue stream that is separate from the add-on or the service bureau fee. Traditionally, these bank rebates work like this. If your sub-offices file X amount of returns, the bank will then rebate you X amount of dollars per return. So let's say the rebate structure was $10 rebate if you file 1,000 returns. Like in the example earlier, then you would get an additional $10,000 rebated to your business. That's a pretty good deal for a service bureau that now can focus their entire business on providing as much value to its sub-offices as possible to help warrant the revenue structure we have discussed today. If you are someone that is interested in starting a service bureau and want more information, our team is always here to help guide you through the process. Just reach out to us at sales@crosslinktax.com or contact us at 800-345-4337. I hope today's episode provided some value, and if so, please remember to subscribe to us wherever you listen to podcasts. Thanks for joining in with us today on this episode of the TaxVerse Podcast Experience. I am your host, Zach Kreitz, and I will catch you on the next one.